If you follow the stock market and Tesla news, you would know that the price per share of Tesla has seen one of the most frightening jumps. The year 2021 was a mixed bag for Tesla, but the company's stock price went up. This doesn't mean there weren't any bumps along the way, though. The stock price went up and down because of problems like the sneaky deal with Hertz to buy 100,000 Model 3 seconds and the rough launch of its self-driving software. Still, experts think that the company will make huge steps in the next 5 years to raise its stock price. Good news for those who own Teslas. How much Tesla stock does it take to make $1 million? When is the best time to invest in Tesla? In our film for today, we will answer these questions and more. Tesla is an American company that makes all electric cars and started making them in 2008. Since they made their first car, the Roadster, the company and its CEO, Elon Musk, have been an inspiration. The company and its overall plan have done very well. This is probably because they were the first ones to start making electric cars. They are in charge of the electric car business right now. The company is doing so well that its CEO, Elon Musk, is now the richest man on Earth and is well on his way to becoming even richer. Musk is in charge of a lot of different businesses. Today, though, we'll look at Tesla, its stock, and how it affects the stock market. After the success of Tesla's $100,000 Roadster, the company filed a Form 1 with the United States Securities and Exchange Commission on January 29, 2010, saying that it planned to file an initial public offering on May 21, 2010. In a strategic partnership, Tesla and the Japanese car company Toyota decided to buy $50 million worth of Tesla stock that was being sold privately. Both companies decided to work together to make electric cars, parts, and engineering support, and to help them grow. But this partnership didn't last as long as either side might have hoped, and in October 2014, Toyota sold the Tesla shares it had bought. Where do we go from here? Tesla Motors' first public sale began on June 29, 2010, on the National Association of Securities Dealers Automated Quotations. It sold the public about 13,300,000 shares of its common stock for $17 each. Tesla got about $226 million from this move in 2013. Due to Model S fire problems, Tesla's stock fell by 20%, and in December 2013, it finished at $30, down from $38. In August of the same year, 2022, Tesla's share price is around $1,049, and the company has a market capitalization of more than $1 trillion. On November 2, 2016, each share of Tesla was worth about $38. A $1,000 investment would now be worth around $31,286 because it would have grown by 3,025%. Now, the S&P 500 average would have given a return of 142.4% over the same time period. It's not too late, thank goodness. How can we tell? Don't take us seriously. Hear what ARK Invest has to say about Tesla and the stock of Tesla. How does ARK Invest work? ARK's website says that its thematic investment strategies cover a wide range of market capitalizations, industries, and countries. These strategies focus on public companies that ARK thinks will be leaders, facilitators, and beneficiaries of disruptive innovation. ARK's ideas are meant to give long-term growth, but have nothing to do with traditional ways to spend. Cathie Woods is the CEO of ARK Invest. The company put a lot of money into Tesla a long time ago, and now that it has sold some of its shares, it is seeing the results. ARK Invest is very well known, and it seems like they know what they're doing. The company made a 5-year prediction for Tesla, and according to their math, you don't need a lot of money to become a millionaire by buying Tesla stocks. Let's quickly go over what ARK Invest has to say about Tesla. Cathie Woods thinks that when new factories open in Berlin, Germany, and Austin, Texas in the next 5 years, Tesla will be able to make twice as many cars. Many experts think that the market for Tesla cars will keep going up, especially in China, where the company that makes electric cars has done very well. The ARK purchase was expected to lose Tesla about $1,500 per share over the next 5 years. Even the most optimistic 5-year prediction was a huge $15,000 per share. However, these values were estimated as of 2020, and ARK Invest looked at their values again in March 2021 after some big things happened at the end of 2020. So let's look at these new numbers. Based on their Monte Carlo study, the value they thought Tesla would be worth changed to $3,000. ARK says that the Monte Carlo model has 34 inputs and has 40,000 possible runs. Spend money on 2025. ARK Invest says that there is a 25% chance that one share of Tesla will be worth $1,500 or $4,000. If Tesla can reach certain goals, the stock price could go from $1,000 per share to $4,000 per share. What important changes did ARK Invest make to its model? First, the predictions for how well Tesla uses its capital were looked at. Capital market efficiency is how well the current price of an asset reflects the current knowledge on the market. It works the same way as gross profits. If Tesla spends $1 billion building a plant, the money is written down on a balance sheet and lost over time. Due to depreciation costs, Tesla's income would go down by a certain amount each quarter. In 2020, ARK invested in capital efficiency that was expected to be between $11,000 and $16,000 per unit capacity. But these numbers have been changed to $6,000 and $8,000. In 2019, Tesla spent $1.33 billion on capital expenditures and made 509,737 cars, which is 144,505 more cars than the year before. This means that their capital expenditures per extra car made were about $9,200. In 2020, Tesla spent $3.16 billion on capital expenses. This means that its capital efficiency in 2021 was $10,330. Assuming that the number of cars made goes up by 60%. Note that this calculation probably overestimates how much money is needed for an incremental car, because some of the money is spent on long-term projects like autonomous data centers and Tesla's vertically integrated cell plant, which Tesla is known to do in secret at Tesla's Battery Day in 2020. Tesla said that over time, its new chemistry and way of making cells would cut investing costs by 75%. To give credit to Tesla for what we think is better use of cash, based on these new predictions and the extra year of growth we added to our model, we think that Tesla will sell between 5 and 10 million cars in 2025. Second, ARK thinks that Tesla might be able to make more money from insurance because it collects very detailed information about how customers drive. Tesla's insurance product was released in August 2019 and is only offered in California right now. ARK thinks that in the next few years, Tesla will take its insurance business to new states and pay for its insurance plans that way. Because its cars are safer than normal, Tesla should use real-time data to sell insurance in its cars, set prices for it, reduce the cost of getting new customers, and make more money. Also, ARK's bear case now includes Tesla's chance to build a ride-hailing service driven by people. ARK had said before that a Tesla-driven ride-hailing service would be cheaper than what was already available. This would lay the groundwork for a fully driverless ride-hailing network. In our worst-case scenario, ride-hailing could add $20 billion to Tesla's operating profit by 2025, which would raise our price estimate by $500. In order to get ready for its robotaxi service, Tesla might first build a ride-hailing network that is driven by humans. This would provide a highly profitable source of recurring income and reduce the risk of a failed driverless service in ARK's bear case. A ride-hailing business run by people could significantly raise Tesla's price goal. Lastly, ARK's previous value estimate said that Tesla had a 30% chance of being able to drive itself in the next 5 years, which would end in 2024. ARK now thinks that by 2025, the chance will be 50%. Since their last prediction, neural networks have solved some hard problems that were once thought to be impossible to solve. This makes it more likely that robotaxis could be used in the real world. ARK says that Tesla's fleet of cars sends between 30 and 40 million miles of data every day. This is up from 20 million miles per day last year. If everything goes according to plan, Tesla could quickly expand its robotaxi service and use the extra money to make more cars for its driverless network in 2025. Ride calling could make up most of the value of Tesla's business. So, what does this all mean? If everything ARK says is true and Tesla's stock price is expected to quadruple, then getting 400 shares at $440,580 in 2022 would give you a profit of about $1 million by 2025. Musk has been selling most of his Tesla shares, so the price may go down in the next few months. However, now may be a good time to buy one of the best stocks in the world. Do you think that Tesla would reach the numbers that ARK predicted? Add your thoughts below.